Joining us right now is Jason Trennert, Chairman and CEO of Strategas Research Partners, a Baird company, and it's always good to see you and to see you back at this table.
Yep, I'm thrilled. I'm thrilled to be here. You know,
we're
how do you like the new haircut? It's all right.
Looking good.
Okay,
it's looking good. And we're just thrilled that you're healthy and doing well.
Yep,
so
I'm doing well.
We're very happy to hear that. Take us through all your thoughts on where the markets are, maybe a little bit of what you think happened this weekend, if you think that's going to have an impact. I'm actually surprised that we haven't actually seen a bigger impact one way or the other.
Yeah, I mean, I do think what happened this weekend actually fits in pretty well with, by luck, by kind of one of our big themes this year is that we believe commodities are going to occupy a much greater place in asset allocation. A lot of the foundations, pensions, and endowments we work with really have very little exposure to commodities, and one of the things we think Venezuela represents is that there's a resource nationalism that's going on, whether it's China, Russia, United States, and that's not often said, but I think that's a big part of it. Another big theme is just the gamification of the markets and this blending of gambling and investing, which
you mean prediction markets and the like?
Prediction markets, and if you look at CME did a deal with FanDuel 2 weeks ago. Yeah. Robinhood clearly has relationships with other prediction markets, and I think as a Wall Street guy, I can't say I'm thrilled about it. Right. By the same token, it's happening. And so it's.
And are you seeing professionals use it now in terms of either hedging certain positions, taking certain gambles on things? By the way, we did see, I don't know if you saw the news over the weekend, there were people who had bet on Maduro's arrest and to some degree this whole invasion, oddly enough.
So I personally haven't seen it, but it would not shock me in any way that our hedge fund clients are starting to use the prediction markets to hedge some of their macro trades.
As a Wall Street guy, you don't like it because?
I don't like it because I love the financial markets, and I don't want to see them tarnished by something that's not really, you're making it a game as opposed to investing. And also just through the years, I mean, I just know Wall Street takes a good idea and then blows it up to the point that it throws up all over polite society. Right, so, whether it's CDOs, whether it's portfolio insurance, whatever it is, they take decent ideas and then really add leverage to it, and then it eventually becomes a problem.
So what do you do with that as an investment theme?
Yeah, as an investment theme, frankly, we're playing it. I mean, so, we own Robinhood, we own CME, we own ICE. Because all of those exchanges are getting into those markets. And Flutter, Robinhood, all of those things. In our opinion, I don't like it, but it's happening, and I wouldn't stand in front of it.
More broadly, if we get together a year from now, I'm sure we'll hope to see you a lot more between now and then.
Yes.
Where do you think we really land? Where are we?
Listen, as a strategist, we were talking about this in our morning meeting this morning. It's very hard in a rip-roaring bull market to be correct about where the market will end up, because you have some discipline in terms of valuation, in terms of PEs. And so, I would use roughly like 7,500 for the S&P 500, but if I'm going to be wrong, I have a feeling it'll be higher. And that's largely because profit growth estimates are about 15%, up 15% this year.
We spoke to Tom Lee in the 6 o'clock hour, and he also has a higher expectation for the end of the year, but along the way believes that we could see a 10, 15+% correction.
Yeah. Well, you have the midterm elections. You have a new Fed chair, right? There's a lot of moving parts this year. Now you have what we were discussing in terms of what's going on with this resource nationalism. Right. I think you're right. I think Tom's right.
What about the AI piece of it? Because a lot of folks are either concerned about it or excited about it.
Yeah, no, this is one of these things, and I kind of almost purposely left it out because I don't know. I've never seen a technology that is as exciting as this. Right. I've also never seen capital spending as robust as this, and it seems to me there are going to be some downward surprises along the way. I still don't think that would be enough to stop the trend.
Right.
Because the utilization, end utilization is not particularly high. It's still relatively low.